So in a way, as a client,
It's almost to your benefit.
it's almost to your benefit because it's a gotcha. Gotcha meaning if your advisor makes a mistake or follows up or so forth, and he's serving you, and when he shouldn't be, he's in default. He's in trouble right from the get-go, as is the firm he works for.
Yeah.
So there's been some high-profile cases, but obviously not enough. You know, we sit and we see at the provincial level in Canada, we see the fines go through as the commission does report them, and from time to time the commission will come out and say this particular firm was reprimanded or fined, and they'll send out a distribution email to all registered advisors such as themselves saying that they've fined or penalized some individual or firm for an infraction and what the fine was in the circumstances. But most Canadian dealers are well aware of the interprovincial consequences of dealing across the border. But as I said, less so. Well, certainly we see it, as you said many times. I mean, prospective clients that we've talked to, and, you know, yeah, I've been in Canada for 5 years or 10 years. Yeah, I still have my RA. Yeah, I still deal with
Joe
the old
down.
Merrill, let's use Merrill Lynch because they don't exist anymore as such. So, but I've been, may see no fit to change. And yes, my broker knows, but we use my sister's address and everything seems to work okay.
Yeah.
Yeah.
Until something goes wrong.
Until something goes wrong.
Okay. So that's we're going to have to build this as something goes wrong, I guess, because when and how, when is a broker, and I shouldn't ask you this, but I want you, because you're such a senior person in this, and you are the founder of your own company and so on, and you've worked, as I understand it, for a couple of the major, vice presidents of the major brokers in Canada. When does a client, let me do it another way. I think it's buyer beware. I think if I make an investment in some stock or something or other, that and I lose, it's my loss. When should I get to go? When, and it always surprises me when I see somebody is paid off when they lost money. When is a broker responsible for my money loss? I mean, that doesn't make any sense to me.
Well, there's different types of, when you hire a broker, I mean, there's different types of arrangements in terms of, is it a fee-based? A fee-based is a discretionary account. Is it a purely...
a discretionary account, I gave you the money and you make...
Right. Did you give your money to the broker who then either managed it on a discretionary basis or subcontracted it, which basically is what these so-called wrap accounts are for, where you pick them, you say, okay, I have $500,000, and they say, okay, we have this suite of 12 different investment managers we'll subcontract the management to because they're experts in, we'll hire an expert in large cap U.S. stocks, we'll hire an expert in fixed income bond strategies, and we'll find the best of the bunch for you. And so there's that type of arrangement, which has been a very popular arrangement here over the last 10 years, managed accounts. You have the traditional brokerage account, which I think you might be referring to here, is that, you have a couple $100,000, you phone in, or you're referred to an individual advisor, broker, stockbroker, if you will, and you buy and sell things for a fee. So you buy something, you get charged a commission, the traditional stockbroker model. So there's different areas of compliance from a compliance point of view. So the way it's supposed to work is that if you build a relationship with a broker, they document you in terms of your goals and investment objectives and your tolerance for risk and this type of thing, and makes his advice or gives his advice within the context of your needs and objectives and so forth. And this takes into account.
I mean, whether high risk, low risk,
high risk, low risk, your age. I mean, I, as a manager over the years, went through all kinds of 25 years in the brokerage business, defending brokers and arbitrating disputes just like this. And let me back up a little bit. So that's your question. So once documented, the advisor is supposed to
Work within
work
those
within
parameters.
those parameters. And one issue is called suitability. Is the investment suitable for this particular client? If the person's 75 years old and your broker selling them ABC mines, junk mines, is that appropriate and suitable? Maybe or maybe not, right? Depending. There's always been in the brokerage business the question of churning. You know, has my broker bought and sold, recommended buying and selling things on a rapid fire basis simply to generate commissions? These take on various forms. So you have the issue of churning for fees or commissions. This has taken the form of various guises. For example, traditional stock churning, right? Buying and selling individual stocks. Then there was a period of years there where it was in the mutual fund side of things, you'd have a person would buy mutual funds on the deferred sales charge basis where folks didn't pay a fee up front and were in some cases, certainly cases that I oversaw had to defend where, you know, the client wasn't sort of, you know, was almost led astray to believe that there was no commission to the mutual fund because there was no charge to buy it, but they were simply told there was a redemption fee if they cashed it in earlier than a certain period of time. And I know that caused quite a fuss in the business simply because people didn't think, they realized that, gosh, it's
If I cash this in-
7 years
Yeah.
before I get rid of that. But moreover, in the mutual fund area was an issue, a yellow flag, if you will, was switching. You know, a broker would buy a client, put them in these mutual fund, and then switch them from large cap equity and charge a switch
Yep.
fee. So there's another way to churn. So that's you know. So if you had active commissions in your account, you know what's active. You know, certainly a red flag as a supervisor in my mind over the years if there was, in excess of 3% of the value of the account per year. In that
need to
area,
roll
3,
over.
4, you know, turn, you know, commit 3%. You know, that's getting up there in terms of a fairly heavy fee. But back to your question, when do you as a client, you know, you have to understand, I mean, there's two sides to it. The client has certain responsibilities too. It's not always,
I'm going to need a break for a second here.
for sure.